Subscribers asking, why is a weak yen bullish for the Nikkei and a weak pound bullish for the FTSE, yet a strong dollar might be bullish for U.S. equities? I don't know if a strong dollar is explicitly bullish for equities, but...
Yeah, well, so a weak yen, so the FTSE, the reason it's bullish, we'll take each of those economies separately. Japan is an export economy. It doesn't have any domestic growth or inflation. I mean, they've been having flat to down nominal GDP growth for almost 25 years now. So Japan needs foreign export. They need export growth to really grow their economy and produce corporate profits. The FTSE is not necessarily a UK domestic industry. I mean, a lot of companies, international companies, list on the FTSE. If you think about Vale or other very large metals and mining players, sort of capitalize themselves on the UK stock market. So to the extent that the crown goes down, it's likely that they're inflating profits in that regard. The U.S. is a bit different. The U.S. is a consumption economy. It's 80% services. Consumption as a percentage of GDP is about 70%. Where something like exports, down around 9-10%. Something around manufacturing as a percent of value added is about 19% versus, again, services at 80%. Stronger dollar is very positive for the consumption side of the economy. It's very negative for exporters and anyone who is tethered or levered to export demand. But again, that's as a ratio to the U.S. economy, it's actually quite good. It's actually disinflationary, and it perpetuates a greater degree of unit demand. And this is one of the things I mentioned to a client in a personal exchange this week, not a negative one, a service exchange earlier this week, is that if a stronger dollar perpetuates rising U.S. consumption demand, and the U.S. is the world's largest economy, and it offshores a considerable amount of its production of its consumption, then wouldn't a strengthening U.S. consumer drag up global growth and drag up global export growth because we're consuming more things? It's not necessarily, so like it's kind of incongruent, and I think people see the direct hit to corporate profits from a rising U.S. dollar from an accounting perspective.
Right.
But I don't think I think they're missing out on what a rising U.S. dollar entails, or why the dollar is even going up and rates are going up in the first place. It's because growth expectations are rising, and if those things materialize, then it won't matter. You'll have more unit demand. You'll be selling more products.
Yeah, I think that's what it is. Like, I mean, you see news headlines all the time, like, a strong dollar is terrible for corporate profits. That's one thing that could stunt growth in the new year. So maybe that's the kind of...
Yeah, look, it's definitely not
of the net effect.
Yeah, yeah, exactly. There will be winners and losers, and the point I'm making is that there's almost little to no discussion amongst mainstream media and many investors that we speak with of the positive impacts of a stronger dollar. So if you think about what the U.S. actually exports, 50% of our exports are capital goods. Another 20% are intermediate inputs to capital goods. We export production.
Yeah.
Like we send China the stuff it needs to make iPhones with, and they send us back the iPhone so we can buy it in the Apple Store. If we're buying more iPhones in the Apple Store, well, guess what? They're probably going to need to ship more capital goods to Foxconn and widgets to Foxconn. It's a supply chain. I don't think people, this kind of stuff gets me going, because if you just took one step past your nose on what's actually happening, you'll realize it's never black and white as the sort of media headlines would seem to suggest. And I think that's certainly the case with export growth and export demand and rising U.S. dollar.